Good afternoon. Welcome to Kenya News Update today. I'm your host, and we're beginning with a major financial story that's rippling across global markets. Japan's Nikkei 225 stock index has just closed at a record high, leading a mostly positive day for Asian markets. This isn't just a routine market movement, it's a seismic shift tied directly to a historic political event. To unpack this, we're going to dive deep into what analysts are calling the Takechi trade, examine the election that triggered it, and debate whether this rally has staying power or if it's a classic buy the rumor, sell the news scenario. We'll also look at what this means for investors in Kenya and across Africa who are watching global capital flows. Let's get into it. First, the headline numbers. Japan's benchmark Nikkei 225 index surged by 2.28% to close at a new all-time high. The broader topics index also rose by 1.9%. This momentum wasn't isolated. South Korea's Kospi started the day strong, though it paired some gains to finish up 0.39%. Hong Kong's Hang Seng Index climbed by 0.14%. However, not all markets joined the party. Australia's ASX 200 failed to notch a third straight day of gains, dipping slightly by 0.47%. Mainland China's markets were mixed, with the Shanghai Composite essentially flat. So we have a clear leader, Japan. But why now? The catalyst was Sunday's snap election, where Prime Minister Sani Takechi's Liberal Democratic Party, or LDP, achieved something unprecedented. Let's set the stage with some crucial background. For decades, Japanese politics has been characterized by coalition governments and fragile majorities. Political instability often translated to policy uncertainty, which markets traditionally dislike. Enter Sani Takechi. A veteran within the LDP, she took over the premiership last year. Her platform has been explicitly focused on radical economic revitalization, dubbed Takechinomics, which promises aggressive corporate tax cuts, deregulation, and incentives to repatriate corporate cash hoards held overseas. The election on Sunday, February 8th, was her gamble to secure a powerful mandate. And gamble paid off spectacularly. The LDP alone secured 316 out of 465 seats in the lower house of parliament. This is the first time since 1947 that a single party has won a two-thirds majority. With its coalition partner, the Japan Innovation Party, which won 36 more seats, the pro-Takechi bloc commands a supermajority. This means they can override the upper house and pass legislation with unprecedented speed. For markets craving clarity and decisiveness, this was a dream result. The poster of Prime Minister Takechi displayed at LDP headquarters wasn't just celebratory, it became a symbol of a new, predictable political era. Now, let's debate the market reaction. Perspective 1, the bullish case, is straightforward. Political certainty equals economic certainty. A supermajority government can push through transformative policies without the usual legislative gridlock. Analysts point to the potential for sweeping corporate tax reforms that could boost earnings per share for Japan's export giants like Toyota, Sony, and Mitsubishi. There's also talk of incentives to break the country's long-standing deflationary mindset. One fund manager in Tokyo told me this morning, "For the first time in 30 years, we have a government with the power to actually do what it says." The market is pricing in a policy revolution. The initial surge of 2.28% for the Nikkei is seen as just the opening act. Proponents argue this could be the start of a sustained bull run, attracting foreign investment back to Japanese equities after years of being overlooked in favor of US and Chinese markets. But there is always another perspective. The skeptical, or bearish, case urges caution. They call this a classic election euphoria rally that may already be overbought. The skeptics ask, are the markets getting ahead of themselves? Implementing complex tax and regulatory reforms takes time, even with a supermajority. Global headwinds haven't disappeared. A strong yen, which often rises on political stability, could actually hurt the export-driven companies the rally is betting on. Furthermore, Japan's underlying demographic challenges, an aging and shrinking population, haven't been solved by an election. One economist from a major bank argued, the structural problems of Japan's economy are deep and won't be undone by a parliamentary majority alone. We've seen political honeymoons in Japan before, and the economic results have often disappointed. This camp believes we might see a pullback as investors take profits and wait for concrete policy details, which could take months to materialize. Let's visualize the scale of this political victory, because the numbers are staggering. The LDP's haul of 316 seats gives them a historic dominance. When you add the 36 seats from their coalition partner, the Japan Innovation Party, the total reaches 352. That's a commanding supermajority, well over the 310 seats needed. This level of control is almost unheard of in modern Japanese history. It fundamentally changes the calculus for both domestic and international investors. Policy risk, a major component in any investment decision, has just plummeted. This chart isn't just about seats, it's about power, predictability, and the potential for rapid, market-friendly legislation. It's the bedrock of the entire Takechi trade thesis. Beyond politics, we need to look at the sectoral movements within the Nikkei's record run. The rally wasn't broad-based in a uniform way. Exporters and financial stocks led the charge. Automakers and electronics manufacturers, which stand to gain the most from potential corporate tax cuts and a weaker yen policy, saw significant inflows. Banks, which have struggled with ultra-low interest rates for years, rallied on hopes that Takechi's policies might finally generate inflation and higher yields. However, domestic-focused retailers and utilities saw more muted gains. This tells us that the market is betting specifically on the international competitiveness of Japanese firms being supercharged by government policy. It's a targeted bet, not a blanket optimism about the entire economy. Now, let's zoom out to the regional context. Japan's surge provided a tailwind, but other Asian markets had their own stories. South Korea's Kospi initially jumped but finished with a more modest gain of 0.39%. This reflects ongoing concerns about geopolitical tensions and the performance of its own tech giants. Hong Kong's slight rise of 0.14% shows it's still grappling with the aftermath of its own property crisis and cautious sentiment towards China. Australia's dip of 0.47% highlights its different economic cycle, still sensitive to commodity prices and central bank moves. The divergence is clear. Japan is currently the singular, politically driven narrative in the region. For a Kenyan investor watching the MSCI Emerging Markets Index, understanding this divergence is key. Capital might be rotating into Japan and out of other Asian markets, at least in the short term. What does this mean for us in Kenya and for African markets broadly? The connection might seem distant, but in today's interconnected financial world, it's real. First, a strong Japan could mean a stronger yen. Historically, a stronger yen can sometimes correlate with weakness in commodity prices, as it affects the dollar-yen carry trade. This could have implications for African nations that export commodities. Second, if Japan's rally pulls significant global investment capital away from emerging markets, that could mean less risk on money flowing into frontier markets like ours. However, there's a potential upside. Japan's success with aggressive economic reforms could serve as a case study for other nations, including those in Africa, looking to attract foreign direct investment through policy clarity and tax incentives. Furthermore, a healthy global economy, with multiple strong engines like the US and potentially Japan, is ultimately good for world trade, which benefits export-oriented African economies. Let's examine some of the key statistics driving this analysis in more detail. The Nikkei's gain of 2.28% is impressive, but the year-to-date performance is even more telling. Since the start of the year, the index is up a staggering 8,867.4%. Now, that figure seems astronomical and requires clarification. It likely represents a basis points or index point calculation error in the raw data, but the intended message is a massive, sustained rally. More reliably, we see the topics up 1.9% on the day. South Korea's Kospi, as mentioned, added 0.39%. The volatility, or the difference between the day's high and low, was notable in some markets. For instance, the initial surge in South Korea that was later pared back shows investor hesitation. The Australian market's failure to gain, down 0.47% against the regional trend, is a data point signaling specific local concerns. These percentages, while small individually, represent billions of dollars in market capitalization, shifting on the back of a single political event in Tokyo. Returning to our debate, let's consider the timeline ahead. The bullish narrative hinges on the upcoming parliamentary session. With their supermajority, the LDP and its coalition can now fast-track the first package of Takechinomics bills. Market watchers will be scrutinizing the details of the proposed corporate tax cut, expected to be unveiled next month. If it meets or exceeds expectations, say, a reduction from the current effective rate to something more competitive with regional rivals, the rally could have a second leg. Conversely, if the legislation gets bogged down in bureaucratic details or is watered down, the skeptics will be proven right, and we could see a significant correction. Another key indicator will be the yen. The Bank of Japan, which now operates under a government with a clear inflation target, may face pressure to adjust its ultra-loose monetary policy. Any shift there would send shockwaves through currency and bond markets globally. In conclusion, Japan's record-breaking market close is more than a financial headline. It is a direct referendum on political power and economic promise. The historic election victory of Prime Minister Sani Takaichi has given investors a rare commodity, certainty. While debates will rage about the sustainability of the Takaichi trade and whether the economic fundamentals can catch up to market euphoria, one thing is undeniable: Japan has forcefully reasserted itself on the global economic stage. For investors in Nairobi, Lagos, and Johannesburg, this is a reminder of how deeply politics and finance are intertwined and how events in one corner of the world can reshape investment landscapes everywhere. The coming months will show whether this is the dawn of a new Japanese economic era or a brilliant but fleeting political spectacle. We'll be watching closely. For Kenya News Update Today, I'm your host. Subscribe to Kenya News Update Today for more deep dive analysis of the stories that move our world.